Hello everybody, this is Lara at Elliott Wave Gold, soon to be pureelliottwave.com, with a weekly analysis of Bitcoin for you. I've published charts with text and commentary on my website, and I'll link that below in the description box. I'm going to be doing this publicly for another couple of weeks, and then this weekly Bitcoin analysis is going to be part of Pure Elliott Wave Weekly, which will be once a week analysis of Bitcoin, S&P 500, gold and US oil, and it'll be available on pureelliottwave.com. If you want to have a grandfather rate, a special rate, it'll be available in the first 24 hours. You can register your interest at pureelliottwave.com. We've got a sign up form there. Let's jump into it. Bitcoin's moved higher, which is exactly what last week's analysis expected, and I expect it's not quite done. There is a little bit of bearish divergence between price and RSI after RSI just dipped into overbought, and RSI is still overbought, but that divergence is just too weak. There's a long way to go before this upward swing could be over. A quick step back and looking at the entirety of Bitcoin's price history, my bigger picture wave count on the monthly chart, and this is on a semi-log scale, sees from this low to this high a complete Elliott wave impulse, which is, apart from a zigzag, the simplest Elliott wave structure, a 5-step forward pattern, 1, 2, 3, 4, 5, followed by a 3-step back pattern. I haven't put the labels ABC here on the monthly chart. You can see them at lower time frames. This 3-step back pattern I've labelled cycle wave 2, and it's an 84% correction of cycle wave 1. If you look at this on an arithmetic chart, you can see just how extreme this market is, but when you look at it on a logarithmic scale, it makes the Elliott wave structures a little bit clearer, and this is the correct scale for a higher time frame for a market that behaves like this. It's like an extreme commodity. This 3-step back pattern is now being followed by an incomplete 5-step forward pattern, and so one fractal higher, we label this 1, 2, 3. Here's a smaller fractal, 1, 2, 3, and then 4, 5. Within cycle wave 3, so far we have primary 1, 2, 3, 4. Now I know when you look at these waves, primary 3 and primary 1 on a semi-log scale, they look a lot shorter than primary 3 and primary 1 within cycle 1. But if you look at the actual length in terms of price, distance travelled, they are much, much, much longer. So it looks slightly odd on a semi-log scale, but this is absolutely valid, and I still want to leave this labelling at primary degree. I am open to having to move this down 1 degree, and this could just be possibly primary wave 1 and not cycle 3 unfolding. I'll be open to that when we have the completed 4th and 5th wave, and then I'm going to have to consider both possibilities. But depending on how long it took and how long we expect a primary degree wave to last, that may or may not be a reasonable expectation. This structure, cycle wave 3, must meet a bunch of core Elliott wave rules. Primary 1 is complete, primary 2 may not move beyond the start of 1, and it didn't. It's a 91% correction of primary 1, so it's very deep, and it subdivides as a zigzag. Primary 3 is longer than primary 1, so it won't be the shortest out of 1, 3 and 5. That core rule will be met. It's moved beyond the end of primary 1, that core rule is met, and now primary 4 I expect is unfolding sideways, and it may not move into primary wave 1 price territory below 13796.489. This invalidation point is absolute. I will allow no breaking of that rule. I'm not going to fudge it. The rule is absolute. No part of primary 4 may move into any part of primary 1. When primary 4 is complete, it's a sideways consolidation. I'll be expecting an upward breakout for primary 5. And when I know where primary 4 has ended and primary 5 has begun, I'll use Fibonacci ratios between 3, 1 and 5 to start to calculate more targets for you for primary 5. Let's take a look at the weekly chart. Actually, just before we go there, I was analysing Bitcoin on a daily basis up to the end here in December 2017, and I did publish an analysis for my membership, which is now public, on the 23rd of December, which identified this as a sustainable high and expected a huge crash, and an 84% reduction in value is by any definition a crash, even though it doesn't look like it on a semi-log scale. The point of bringing this up again is when I was analysing this on a daily basis, I was using Fibonacci ratios at primary, intermediate and minor degree to try and calculate targets for where this was going to end, and it blew all of those targets away. In the end, I stopped trying to calculate targets and I relied on classic technical analysis to identify that high along with a complete Elliott wave count. I'm going to do that again for the end of cycle 3. My targets are highly provisional. This market doesn't always exhibit Fibonacci ratios between its actionary waves, making target calculation very difficult. I've noted this on the chart here. Primary 3 exhibits no Fibonacci ratio to primary 1, and nor does primary wave 5. That makes it very difficult. Within primary wave 3, intermediate 3 and intermediate 5 does exhibit a Fibonacci ratio to intermediate 3, and intermediate 3 exhibits a Fibonacci ratio to intermediate 1, although a very, very extreme one. This is mathematically correctly a Fibonacci ratio, so we may see it happen here in cycle wave 3, we may not. I'll have to be flexible and open, but I will be relying mostly on on classic technical analysis and a complete Elliott wave count rather than Fibonacci mathematics here. Okay, let's take a look at the weekly chart. We're at this low here for cycle wave 2, is this point down here. Now we're zooming in on cycle wave 3 with primary wave 1 complete, primary 2 a complete zigzag, a 92% correction of primary wave 1. This is a very deep second wave, and the first big second wave in a new trend for this market is usually very deep, so it's following its common pattern. Primary wave 3 exhibits no Fibonacci ratio to primary wave 1, and now primary wave 4 I expect is underway, moving sideways as a triangle. We don't know what kind of triangle yet. We have to be open and flexible to multiple possibilities here, but at this stage the structure here looks most likely to be a triangle. There's strong support here. I expect it's likely to hold. If it turns out to not be a triangle and it could morph into some kind of combination, then it may not move into primary 1 price territory. When primary 4 is over, I'll add to target calculation at primary degree. For now, I'm going to use an extreme Fibonacci ratio and calculate a highly provisional target for cycle 3 to reach 11.09, the length of cycle wave 1 at 223535. I have 3 daily charts at this stage for primary wave 4. When markets are in corrective structures or counter trend movements, in classic technical analysis terms, we identify resistance and support, and we expect swings from resistance to support and back again. Or we just expect quick sharp pullbacks, and it's impossible in technical analysis terms to tell what the market's going to do, which of those two behaviours in a counter trend movement, until we have a confirmed breakout. Elliott wave tries to give structure to those swings, and if you have your Elliott wave count correct at 1 degree higher, then you know what direction the breakout should be. That gives you an edge over other technical analysis methods. I have 3 charts for primary wave 4, and it will be important and necessary to continue to consider multiple structural possibilities, because there are more than 23 possible Elliott wave corrective structures that a 4th wave can take, and it's impossible pretty much until it's over, and sometimes even beyond that, to be absolutely confident of what the structure was. So let's take a look at what I expect now is the most likely. With the all-time high for Bitcoin here, the end of primary 3 is this point up here. From this high to this low, I'm going to label this downward movement a complete zigzag and intermediate A, and now intermediate B unfolding as a zigzag higher, and then we'll have C, D, E of a possible triangle. This is only the first of 3 daily charts. A couple of points to note about this downward move for intermediate A. I have an extended A wave, and my Ute wave 5 ends with a small truncation. The truncation's not too big, and it has come after a strong downward movement for my Ute wave 3. This is a situation in which I will allow for the labelling of a truncation, and I'm going to label it like that and not label an impulse down here, because if you label it 1, 2, 3, 4, 5, I'm really struggling to see what structure you could label this movement as a 4th wave and have it make sense. If this high was slightly above this high here, then I would label it like that, and the fourth wave would be A, B, some kind of C wave, or W, X, Y. Although this looks like a 3, this doesn't look like a 3. I've tried multiple different ways to label this as a corrective movement, beginning here and ending here, and I just cannot find an acceptable solution. People keep complaining that I have this little truncation here. It's there for a reason. This has the best fit in terms of Elliott wave structure. Moving on to the structure now of intermediate wave B, I'm labelling it as a possible zigzag, although I may need to move the degree of labelling here down one and see minor A incomplete and then B, C. For now, I'm going to label it with a short A wave, a deep B wave, which is a 94% correction of A but didn't move beyond the start of A, so this is technically possibly a zigzag, and an extended C wave with 1, 2, 3, 4, 5. Minor wave B I'm labelling as an expanded flat A, B, C, with wave C an ending contracting diagonal. I think this has a better fit in terms of how I had it labelled last week. It's reasonably academic at this point, but we're getting nitpicky comments on YouTube, so fine, I'll just spend a bit more time on that little detail. Another comment that I keep getting about this wave count is I have a long A wave and a short C wave. That's absolutely fine. There is absolutely no Elliott wave rule that states A and C must be equal in length. It's a guideline, not a rule. And sometimes one of them is extended and the other one isn't. And here, wave C is very close to 0.382 the length of A. There's a really nice Fibonacci ratio between minor waves A and C. This is absolutely acceptable, and again, the reason why I'm not labelling it an impulse over here and over here is for reasons previously outlined. Okay, my research and experience with Bitcoin and triangles in general gives me a reasonable range for the most common length of a B wave within a triangle, and that's usually fairly close to about 80% the length of the A wave. So that's why I've calculated this target at 57,669. I'll expect more upward movement for a zigzag for intermediate B to around about that target. This target is approximate only. When we may have a zigzag complete for B, and we'll have some technical evidence of a potential high in place, I'll expect a single or double zigzag down for C, which for both a barrier and contracting triangle may not move beyond the end of A. This invalidation point for the triangle is absolute. 28,893.621 would see the triangle invalidated, and then I'd reconsider primary 4 as some kind of sideways combination. When C is complete, then a single or double zigzag up for D, which may not move reasonably beyond the end of B, and then a single or double zigzag down for E, which may not move at all beyond the end of C, and would most likely fall somewhat short of the AC trend line. Let's take a look at another possible structure that primary 4 could be unfolding as from this high here, which is exactly the same. Now I'm going to consider the possibility of a single zigzag subdividing A, B, labelled ABC, subdividing 5, 3, 5. A few problems now with this wave count. The first problem is primary 2 was a single zigzag. This wave count offers no structural alternation between primary waves 2 and 4, which reduces the probability. But alternation is a guideline, not a rule. We should be flexible and consider all possibilities. Again, I have the small truncation for the fifth wave, that's okay. Now I'm looking at intermediate wave B as a double combination, W, X, Y. Possibly could also label it as a double zigzag and relabel minor wave Y as a zigzag in the same way I have that first chart labelled, which may actually make more sense. But for this, it would more likely have been a double combination because X moves beyond the start of W. For double combinations and double zigzags, they're actually really different structures. They're both labelled WXY, but double zigzags are part of the zigzag family and they should have a strong slope. Double combinations are part of a different family of corrections, a sideways family, and they should have a sideways movement. This doesn't really fit either. For double zigzags, because they should have a strong slope, the X wave shouldn't really move beyond the start of wave W. That's not a rule, that's a guideline of how to expect to see the right look. Because X here does move beyond the start of W, this would have been more likely to be a double combination, because with a sideways movement, X can do that. It can be a bit longer than W. And so Y I was expecting to be a regular flat, subdividing 3, 3, 5, and I was expecting it to fit reasonably well within this channel, but obviously now it's not, and it's moved substantially beyond the end of W. This wave count still meets all Elliott wave rules, but it no longer has the right look, and this is probably going to be the last week I publish it, and I'm publishing it this week to explain to you what's wrong with it and why I'm going to probably discard it or have a completely new alternate next week if I can find a good one. The problem here now with minor Y is it's moved substantially beyond the end of W, and wave Y within a double combination should end about the same level as W, so that the combination has a sideways look to it. This no longer has a sideways look, this has a slope. This wave count doesn't look right. If intermediate A did subdivide as a 5, then intermediate B may not move beyond its start above 64,863.098. I've taken away the target for C because we don't know where B ends. I can't calculate a target for C until I know where it starts. Minute C needs to complete as a 5-wave impulse. 1, 2, 3, 4, 5. It needs to move higher. This wave count's going to look even worse if price does continue higher. This is probably the last week I'll publish it. From this high here, same point. Now let's look at another possible structure for primary wave 4. Here we're going to consider the possibility of a double zigzag that would offer a little alternation in structure with the single zigzag of primary wave 2, so that would be acceptable. First zigzag in the double, complete down here, labelled intermediate W. The double joined by an incomplete 3 in the opposite direction, and we could label this as a zigzag. I could label minor A over here, minor B as an expanded flat, as I have with my first daily chart, or I could label it as a regular flat, A, B, C, with C incomplete. C is now longer than A, which reduces the probability of this wave count. If price does continue higher next week, then I'm probably going to relabel this little portion of movement with minor A over here, minor B an expanded flat, and minor C continuing higher. So a short A and a long C are the zigzag for intermediate X. When X is complete and we know where Y begins, I can then try again to calculate a target for Y for you. The purpose of the second zigzag in a double is to deepen a correction when the first doesn't move price deep enough. And so this potential double zigzag for primary 4 would expect intermediate Y to move reasonably below the end of intermediate W, so price would have to break below pretty strong support down here. Possible, and we need to consider all possibilities. Okay, what about classic technical analysis now? At the weekly chart level, we've got some pretty strong support, and we've got two bullish candlestick patterns in a hammer and a bullish engulfing pattern with strong support at 28,900. Price is broken above next resistance, which is now support, at 42,500. The bullish engulfing candlestick pattern also had support from volume, but volume is now declining as price rises. This is a weekly chart. We don't have data for the current week yet, but so far it's showing a potential decline in volume. We also don't have data from on-balance volume, but let's watch this one carefully. This trend line for on-balance volume is reasonably long held. It has 4 tests, so it's got some reasonable technical significance, and the slope isn't too great. If on-balance volume breaks above this line, that would give a reasonable bullish signal. RSI is in neutral territory at the weekly chart level, plenty of room for an upward trend to continue. ADX declining, the positive DX line moves above the negative DX line, telling us there is a potential trend change from down to up, but it's not yet telling us there is a new upward trend. Most of these are lagging indicators, and here ADX is based on a 14-week average, so necessarily a lagging indicator. If there is a new upward trend, it'll take a while to catch up with that. ATR is declining as price moves essentially sideways now, which is normal, and for the early stages of a trend for Bitcoin, ATR does commonly decline, and stochastics in neutral territory. So at this time frame, it looks like the market is consolidating. We've got strong support now identified, about 28,900, but we can't be confident yet of where resistance may finally turn out to be. What about the daily chart level? Here we've got at these lows bullish long lower wicks. Here we have a morning doji star and a strong bullish engulfing candlestick pattern. Here we've got a hammer candlestick pattern, a bullish candlestick pattern, and here a bullish engulfing candlestick pattern, all finding support about 28,900. The bullish engulfing candlestick pattern does have support from volume as well, and so we can have some reasonable confidence that we've found support. Bitcoin's found support about 28,900. It would take quite a lot now for price to break below that strong support. It's entirely possible, but until it happens, we expect support should most likely hold here. Upward movement started with some push from volume, particularly this session here, a little pullback with lighter volume, upward movement continuing again with stronger volume than the pullback, but volume is now starting to drop off, and so a little bit of concern for the bullish case for the short term here. What about this divergence here between price and RSI? RSI reaches overbought, price develops a swing high, we see a pullback, and then we see between this peak and this peak, and I'll count this red candlestick one day as one peak, we see a single instance of bearish divergence. It really is quite weak though, and this isn't a clear developed peak in price. So I'm not going to give too much weight right now to this single weak bullish divergence because it's only single, because it's quite weak, and because from this peak to this peak, this isn't a well-developed peak in price, not a proper developed swing high. I've found over the years it's best to wait for actual peaks to form on the price chart before you identify corresponding peaks with RSI and look for divergence, bullish or bearish. Because if you look for it prior, sometimes, quite often, it just disappears. You've got to wait for those peaks to form. So this would suggest that upward movement may be weakening along with some decline in volume. But look at this, we had really light volume for 4 sessions here after this first day, and then we had 1, 2, 3, 4 days of upward movement with weak volume before we get a strong volume spike on this session. And so weak and declining volume within the early stages of Bitcoin's trends, if you look back at the history of price and volume for this market, isn't actually that unusual. So for this particular market, not too much of a concern. Stochastics overbought, ADX indicating an upward trend, so there is an upward trend, let's expect it to continue. Next resistance 50,000. Plenty of room to go before ADX indicates a very extreme trend. This market can sustain very extreme conditions for quite a while price moves a considerable distance. So if we look back again and study the price history with ADX and RSI of this market, there's plenty of room to go before this upward movement gets too tired and we should expect a change. That supports the Elliott wave count and supports the view of that first triangle daily chart. That's all for me this week. Analysis again for Bitcoin for you next week. I hope all of you are having a fabulous day.